Tick-tock goes the market clock. Bulls run wild, bears don't talk. Up or down, it's a coin flip game. Buy low, sell high, don't lose your grip. Stay sharp, stay fast on this trading trip. It's trading tips with Jim. Win or learn, never give. Stack your knowledge to the brim. Tune in now, let's begin. It's trading tips with Jim. Win or learn, never
You are listening to your favorite stock podcast, Trading Tips with Jim. Where we're heading into week 47, I will give you 4 stocks which I think will do very, very well in the future. I'm not alone, the analyst thinks so too, and I believe now is a very, very good time to really start look for them and start pick them. I will do that myself. And to those of you who said I was wrong when I said I'm selling my Nvidia shares, I'm selling my Tesla shares, this is 2 weeks ago, and you all said, oh, you are so wrong. Well, Tesla is down 15% since I sold it, Nvidia down more than 10% since I sold it, and I will soon get back to the shares which I think, especially Tesla, have a great future. I'm just waiting for that very, very good buy where I will buy more shares because I sold at higher prices, so I will accumulate much more shares this time. But I did another thing. I bought Chipotle during the week. Chipotle down more than 50%. The restaurant industry has been struggling a little bit, but I am ahead of the trends. That is how I do it. I buy on red days. You usually buy on the green days just to meet the red day and see your investments go a little south. 74% of all traders are losing money, most of you, because you do the opposite thing of what you should do. You should use the red weeks to buy. I have for 3 weeks now predicted red weeks. Telling you already, I believe next week will be a red week. I will argue why in just a minute. Some of you are just skipping in because you are, don't know what you are. You're just here for a few seconds, then you jump off. Maybe you don't like what I say or have other things to do. I don't know. But most of you are losing money. I'm pretty sure about it, because what you do, your behavior also tells a little bit about you. And jumping in and out of stocks, trying to scoop a little here and there is the guaranteed way of losing money. You are better off finding the long-term trends. One of the things that you should use is what you expect next week to be. I already said I expected next week to be red. I will argue why. But I also said that I used red weeks to buy, and I for sure will use next week to buy, because I sold when markets was very, very green. I started to reduce my holdings, saying that I expect market to be red. I don't want to sit to exposure because I will use the chance when markets are red to buy. And in the week ahead of us, the most important thing will be on Wednesday when Fed will talk. And knowing current chairman, knowing his political views and all of this, you can just expect that to be a neutral assessment for the week. He don't want to give any presents in his last few months as chairman, I guarantee you that. So most likely there will not be any signal of interest rates cuts. Market is not going to like it. They are already in a downward trend, and I think that will push it further down. Wednesday is especially a day which I think will be volatile. But before that, it starts on Monday. We'll get some numbers from New York. New York is a chapter by itself. I don't expect New York to deliver anything nicely over the next probably maybe 5-10 years. Wouldn't be surprised if we look back and see that most of the best businesses will leave New York. Anyway, they will come with state manufacturing index. It's a slight indication of what is going on. Then it will be Wednesday, as I said, with the Fed minutes, but housing and building permits will also come on Fed on Wednesday. And this gives an indication of the housing health and economy demand in general. There will be jobless claims on Thursday. Hasn't been much numbers due to the shutdown lately, and they are expected to come in a little bit high. We will see. And then it will be S&P Global Flash PMIs on Friday. I said I believe it will be a red week, and I think maybe Wednesday will be the reddest of them all, and that might just be the day where I buy Wednesday or Thursday. If you look at the chart, and you should do this to try to get an indication, there is two things which I like and which I don't like. First off, what I really like is the strong upwards trend for Nasdaq, and as I said, I will not be surprised if Nasdaq is at 25,000 points by Christmas, by New Year. I think it's a very fair chance that it's happening. What we see now is a natural correction. I warned you about that 3 weeks ago. It's happening as a playbook. I also told you that there is so much support below that I thought, last week I said I thought it would be a red week, but not by much, because there is so much support below. It will be a slow one. The thing which I don't like is that the small upturn that we had in the very beginning of the week was on falling volume, meaning that there was not really much buying interest, but there was not much selling interest either. And when the market fell, there was a lot of activity going on. We like that. It's divergence. It can signal a change. RSI is still not low enough to be where it has turned previously. It's turned above oversold. It turned around 35, 37 previously, and currently sitting at 45. It's still a little high. To me, this says that I will not be surprised if the market is ticking downwards during first part of the week, and then finds a bottom. Maybe the bottom will be on Wednesday, then pushing upwards, that we will get back to a place where we'll go back to green weeks. The charts have increased drastically. The one thing that I'm not sure of is if all the support below argues that this will not be like huge drops. Wednesday can be where we get like Fed talks. We get 2% down just to end the day, maybe 0.5% or something. It may very well happen. Had it already weak, more volatility, but I'm not sure. But there you have it. There you have my playbook. I believe it will be a red week. I will use the chance to get back maybe into Tesla, maybe back into Nvidia. I'm not so sure about Nvidia, but Tesla, I just want a very good buying price. There will be some quarter results. We'll get back to them very shortly. If we look at the signals, I use this all the time because it gives some fundament for my argumentation. Buy signals across all the stocks are continuing down. It's 26% across all stocks from 27 last week. Still not there where it is classic oversold. When we are getting this low, because Nasdaq only 10% buy signals, when we're getting this, we can have that dip. I really hope I look for that dip. I'm sorry for any one of you losing money during dips, but I need these dips. That's where I do my perfect entry positions and scoop up. I used it when I bought Tesla last time. Everyone, I got so many comments. You are wrong when I said, oh, I'm buying Tesla and Nvidia. I'm using this chance to buy these stocks on the last dip. And I got a lot of comments on different places. No, it's stupid. Turn a few days later and just double the money in both of the stocks. I love the dips. You just have to have the cash on your side. That is why I use trends. Last time I will say this. I use the longer term trends to balance my portfolio. So I know if it's very green weeks, I slowly start to reduce my exposure. So I have money for the red weeks because they are coming. Just to finish about signals, all the signals is slightly on the lower end, but none of them are low enough. And RSI, just as I said, is still a little high at 45, saying the same thing, that there is a potential for more downside. None of the numbers except Nasdaq has these numbers where you can get huge falls. Oil, $60, saying the same. We want oil down because it has to do with the world economy, and we want the economy to go up. Gold, 4,170. That was due to the uncertainty last week. 10-year Treasury yield, 4.11, holding high. One of the first, I will give you 4 stocks. Here is the first one. And you just have to go many podcast backs. And I told you these are stocks. By the way, for the stocks that I said last week are stocks. Some, I said 2 of them might have potential to start already this week, while one I don't think it will be. I said that GH would not, in my opinion, have a start this week, down 2.2% so far this week. I also said that Astrik something most likely had a fair chance of starting up this week. It's up 3% so far. One stock which didn't go up was Applied Digital, which have been falling 25.8%. And I said, just go back, listen, that I just need a good situation to buy. I have added Applied to my portfolio. But four new stocks. I mentioned these before. I'm just saying I'm waiting for that very good time to buy them. Big Bear AI is one of these stocks, and so volatile. It was up 23% I saw here the other day, and then down 11 or whatever it was yesterday. But this looks absolutely in long term good. If we get a huge fall during the week, I will use all my chance to get into Big Bear. 3 more stocks coming up in a little bit. But before that, I will just give you a few of the long economic trends, just so you understand what is happening. The global growth has been slowing over the last year. It was fueled during COVID, where all the governments were just printing money, handing out hand over fist. And what followed? Of course, inflation followed. Now we have to struggle with it. The growth has been slowing, but very slowly. It was 3.3% in 24 and expected to come in around 3.2% in 25 and then down to 3.1% in 2026. I think that will be wrong, because I think the lower oil price will fuel the economy. Then there is United States, which have had stubborn inflation. All countries have stubborn inflation. The US have been handling much better than many others. The main problem in the US is the insane, massive debt. That has to be fixed somehow, because they're spending way too much paying off debt, and that is the need why they need to be strict on different things. What is for sure is that investment in United States is going to go bananas over the next year. There is so many companies that have shifted. It's a general global trend. They have shifted. Now they are doing investments inside the US. This will fuel the economy in US heavily in 2026. And the reason why, for instance, why I buy Chipotle is because money will flow back into the American economy, into the American workers' hands, and this will start spending again. And I just used the chance to buy stocks which I think is small. The Democrat shutdown just hurt the economy, but what to say? Not much to say. And the long shutdown will have some effects. One of them was, of course, slowing down also the stock markets. European Union is having stagnant growth. No reason why. I will not argue so much about EU, because it's a project which I don't believe in at all. The Green Deal is facing so much backlash, and spent so much money for a country like Germany, for instance, buried itself into the terrible trap of high-cost energy. Green Deal shutting down well-producing energy sources, working towards Green Deal, heavily cost, not returning what they expected, then shutting off cheap energy from Russia. And Germany is just struggling. By the way, I saw Germany wants to borrow more money, trying to ignition back some light in the economic engine. We will see how they do. I don't think Germany is the place where you should invest right now. Told you in last podcast I will get back into shares in Germany, but not yet. I think next year might be the place where to be. China is the one that has been growing. India is also growing very hard. Japan has been struggling for decades after superinflation in the 80s, but slowly getting back to it. The big trends, and these are the things that I want you to take from this, is that there is a great reconfiguration of trade. China has been doing so great for one reason, because we've been ordering everything from China. We've been shutting down our businesses in Europe, opening businesses in China because of cheap labor, because of less regulation, because of everything. Because one thing that Europe and the West loves is regulations. The more regulations, the better we feel. The more taxes, the better we feel. And of course, companies which only have one purpose, to make money, they move where they have the biggest chance of making them. But there is a great reconfiguration going due to the way the tariffs have been played out. As I said, US is getting back a lot of momentum, and the dependency of China for everything is going down. This is a trend, and when you invest, just think about it. Just think about it as such. AI is absolutely fueling the economy, and at some point it will boost up. Maybe it already has, because it's totally overvalued. But for sure, AI is going to reshape the future. What I want you to look at is companies that are in the pipeline, meaning that it's not, I'm not talking OpenAI, I'm not talking Google, for instance, or Meta. I'm talking about companies that are in the pipeline with products that users absolutely really need. Just to give you a slight idea. Movies back in the day were all about standard filming, having the best scenes, everything. When animation came, everyone said, nah, animation is just stupid, you shouldn't put your money into it. One smart guy, Steve Jobs in Apple, he understood where the future was going to be, and so correctly put the money on animation. Animation became super big. Now we see a new change, where AI actually is creating movies. I will not be surprised if there will grow out a new movie company, for instance. This is just an example, but think of what people really use. Try to find a company in the pipeline, and this can be the one stock that will give you 1,000-fold return. This is the one dream stock, because you read about all these investors who invested into Apple when Apple was just a shit company, 2 people in a garage dreaming big. And in the very early, a few people thought, well, why not? Invested, and now sit as billionaires. This might be your chance as well, because AI is changing everything. Energy is also changing a lot, and this is another field where you can go. But you are patiently listening, you want more stocks. Oklo is another stock which absolutely is a stock to look forward to. Been beating down. The same thing with Plug Power. But the forecast for these companies, the expected earning is super great, and Plug Power, Oklo have been beaten in the market lately, getting very close to where it is. The last one has especially been beaten, and I think that now I will use the chance to get into it, because I like everything I see in the chart. There will be a few quarter results. I will just go a little bit quickly through some of them, and where I think they will be. Last week I said that I believe Cisco will go up, and Cisco had such an amazing quarter results, bumping up heavily. Some of you are waiting for the $1,000 challenge, where I try to grow $1,000 as fast as I can. And I sit in NEO, and NEO was beating. I thought NEO would hold a little bit better in Red Week, but NEO was beating down from 711 to 620 for bringing the $1,000 challenge back under 5,000, now at 4,393. End of the podcast, you will get the $1,000 challenge. 5 minutes left. The big quarter results this week, and I'll just mention a few of them, is ACOM. ACM will come on Monday. Earnings is expected to grow, and might just be a good call. Expected stock to pop up. Tuesday will be Home Depot, and the thing here is everyone is looking for where it is going. JD had okay quarter results. Stock was still a little down, but the hopes is that Home Depot has been rigged for a 3.82 earnings per share. We'll see how it falls out, and that this will bring the stock slightly up after earning the results. PPD holdings will come on Tuesday also and expected to go down with high volatility. And Nvidia, of course, Wednesday. And Wednesday was also the FOMC day, the Fed Insights day. Expectations is that Nvidia will continue to make money, but you have to understand that they can put out a super result. Still, stock may fall very hard because the expectations for those who bought last quarter is exactly that it will be super good, and it has to be absolutely good up. Chances is that Nvidia may be pushing up, but at very high volatility, I think it will be a red week. I think Nvidia will come on a day where Fed will just say meh, and that will bring any good results down. My bet is that Nvidia actually will continue to fall. As I said, I have Nvidia. I've sold Nvidia at $204, currently sitting around 184 or whatever it is. I want to get back into Nvidia, but I think Nvidia can be hammered, and I think it'll be lower. I'm not going into Nvidia yet. I will try to find that point, and I will tell you when I will do it. Palo Alto Networks on Wednesday also coming up, and Walmart on Thursday. Walmart and Home Depot both in the same boat. And you heard me say I bought Chipotle, and I argued why I bought Chipotle. Walmart, JD is the same thing. Both of these companies pay good dividends, and I love dividend stocks in a period like this. So there you have the quarter results. There are many more, but these are some of these which can go majorly up or down after quarter results. The main thing that you can draw out of this, Wednesday will be a special day in the stock markets. Everything indicates that. Last company, and then the $1,000 challenge, and the last company is Rigetti, RGTI. Huge fall. Exactly what I thought would happen has happened in the Rigetti, and they are being beaten down. And to me, because the future for earnings estimates, where people believe the earnings will be, and even my in-house systems says the same thing, that Rigetti has the strong potential in the future. Love what I see. This is exactly the things that I dream of. The huge falls, which doesn't make too much sense. Yes, it was very overbought, so the first part of the fall was totally natural. Now it's getting back to levels where it absolutely makes sense to buy it. I will get into Rigetti. Hopefully I will get one nasty red day where I can get the best buy. That are the four stocks: Big Bear, Oklo, Plug Power, Rigetti. All of these are being beaten. I hope that we will have a brutal red Wednesday next week, and I can get the stock cheap, because I am in for the longer run and not the shorter one. And I hope you can be a little bit smart, at least play with parts of your portfolio in a longer run and not put everything on the line for the quick gains. Last item on this week's podcast is the $1,000 challenge, where I try to grow $1,000 as fast as I can. I made it up to 4,393, telling you exactly what I'm doing before I'm actually doing the trades. I sit in NIO at 624. I have a huge NIO stake personally, bought very cheap, and actually I probably will add a little bit more because I see it as a future. But NIO cannot hold a bad red market. This is just people offloading their assets, covering, getting into different total natural thing. But to me, NIO is undervalued, high potential upside. I will still sit in NIO. I'm sorry it's getting a long game in NIO, but I think there is more upside in NIO, and that whatever I pick, I can pick Rigetti. Maybe I will change next week by the podcast. I'll tell you before I do it, into Rigetti or Big Bear AI or something, because we are behind. We are 1 year into the $1,000 challenge very soon, and I want it to be at 10,000, not 4,393. 5,555 was the highest. and I wanted to get to 10,000 so I could split into 2 stocks. I could start to grow this much faster on the journey to 100,000. Anyway, there you got it. That's the podcast for this week. Some of you have been listening all the podcast. A lot of you have been dropping off during the podcast. For those of you still listening, I hope that you really will have a good week, that your portfolio will be much greener by the end of the week, that you will make money, not lose money. Just remember one thing: use strategies. Reduce your losses, increase your gains. Reduce your losses by having stop losses. Make up your mind. Don't be too risky. Together we will continue to grow. Until next week, have a super week. Bye.
Welcome to StockInvest.US Stock Analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.US. By using the information, you agree and are held liable for your own investment decisions.